How to buy a property if it's tenanted. Now this is a big one. A lot of our first homeowners have trouble understanding what the process is, what they need to do. So we're going to go through a step-by-step guide on how to buy a property to live in if it's currently being rented.
The biggest concerns and questions we have are, how's the bank going to treat it? Who's going to receive the rent while they're still in there before I can move out? And can I break their lease? We're going to break it down in this video, and at the end, you're going to know exactly how to buy a house, if it's tenanted, and ultimately if you want to live in it.
So the first question I have, Jaden, is how do I find out if a property is currently tenanted that I'm looking to buy?
So this question actually came from Sue and Ross. They're looking at putting an offer on this place in Red Hill. It's just come on the market, and the main concern was it's actually rented until July this year. So there's a few more months left and the tenancy is in place. But the first question you might be asking is, how did they find out that the property is currently rented?
Now this is something that's stipulated on the contract of sale, so before entering into it, you know exactly if the property is currently tenanted. You can also ask the real estate agent. They will need to let you know if it's tenanted and when the lease ends.
Now the tricky part is because there's an existing lease in place, like I said earlier, it's until later in the year, you can't break it. You're contractually bound to keep that lease in place unless the tenants want to leave. We had one the other day where the tenants were actually offered $10,000 to leave early, but they said, no thank you. They were paying under market rent. They didn't want to have to move, and it was a pain in the neck. So it's just something to keep in mind, because the reality is if you buy a house, you move in a month's time, you're gonna have to make mortgage repayments on that for the next 2-3 months until the tenants leave, and you're still gonna pay your rent. The upside is you're gonna potentially get 2-3 months worth of rent from the tenants that are currently living there.
Now Jaden, what extra searches do I need to do before I commit to buying a property like this?
Again, I'd suggest speaking with the agent, probably more specifically the managing agent, because the sales agent is often different to the managing agent. They're the ones that deal with the tenants. If the oven breaks, they sort things out. And you want to find a bit more about the tenant history. Have they had defaults? Are there any issues there? You could even ask for a copy of the rental ledger. This will show the last 6 or 12 months worth of repayments to make sure the tenant's been paying on time. Because bear in mind, once you own the property, you're also going to have any headaches if there's been any issues with the tenant that's living there at the moment. It could also be worth thinking about getting landlord's insurance for the few months that the tenant's going to live in there and you're going to be a landlord, just in case something breaks, they leave a hole in the wall, they stop paying rent. There's more protection there to make sure you're not going to come up shortchanged and cover any damage that might happen to the property. I guess on the other side, if you're looking at buying purely as an investor, it's probably at this time it's worth checking out some demographics, some local area knowledge, and finding out who your future tenant's going to be. Microverbs is an awesome tool to check this out. It can give you all that information and more.
So Jaden, what happens to the tenant's bond when I take over the property and I'm the new owner?
The bond would have been lodged with the property manager with the local authority. So if you take over the property, the bond's pretty much going to stay in place, but the ownership of that gets transferred from the old owner to you. So if something goes wrong, you're still going to be able to claim that bond in the future.
So Jade, once the property settles and I'm the legal owner of the property, what are my responsibilities as a landlord?
I'd definitely suggest leaving a licensed property manager in place. Some people choose to try and self-manage and take over the ownership themselves, and I think it's fraught with headaches, especially for a short 2-3 month period. The property manager is going to sort out any issues that tenants might have. If there's things broken, they can get it sorted out. And equally, if they go into default or if there's issues with the tenancy, you really don't want to have to end up going to the RTA and mucking around with that. So I definitely suggest that, especially for a short period. The property manager will also engage in routine inspections. So you'll get monthly or every couple of months a report on checking out how the property's been maintained, if the garden's okay, and they can look after all those details too. In the lead up to the tenants moving out, you can also work out the dates when they're leaving, when you're going to move in, if you want to get carpets changed or anything freshened up in the meantime. So there's a smooth transition from when the tenants move out to when you finally move in to your new home.
So how does the bank treat it when I'm actually going to buy the property? I've told them I'm going to live in it, but it's currently rented out.
This is an interesting one because in the short term, technically you're a landlord and the property is an investment, and the bank does sometimes charge different rates if it's an investment property. Fortunately, if it's your intention to move in there as soon as the tenants move out and you're buying it as an owner-occupied home, the bank is going to treat it as such. So they'll give you owner-occupied rates. They're going to assume your rent's going to finish as soon as the tenancy moves out. They don't factor in the current rental income you're getting. And the good thing is you get to use owner-occupied rates as if it's your own home. So there's no downside to that. So in short, if you're buying a property that's currently tenanted, the bank will treat it as owner-occupied home as long as it's your intention to move in there as soon as the tenants move out.
So on that note, how does it actually work for my government fees? Because there are concessions as a homeowner, but the property is currently tenanted.
Depending on your state, you generally need to move into the house within 6 months of settling. So as long as you move in there as soon as the tenants move out, you can meet that clause and the state government still treat it as your own occupied home. Definitely check with your solicitor because they can look at the actual dates on the contract of sale, when the tenancy finishes. You can even get the tenancy agreement from the real estate agent that's selling the place and get your solicitor to check it out to make sure it's all going to line up and it's not going to affect your stamp duty concession.
So another thing to think about is if the tenancy is running for more than 6 months, you could also talk about extending the settlement so the settlement falls in line with you being able to move in within the 6-month period. Talk with your solicitor, also the real estate agent, in trying to liaise to find a middle ground that works for everyone. So I guess the final question I have is, what are the pros and cons of buying a property that's currently tenanted?
The main downside is if you're currently in a house and your lease is going to expire, there could be like a bit of an overlap and just an awkward period where you've got to wait for the tenants to leave before you can move in. You can also try and negotiate through the agent and say like, hey, Mr. and Mrs. Tenant, do you mind if you leave early? I'm happy for you to break lease. I'm not going to charge you any fees, and try and work that out. Like I said with the example earlier, it's not always that easy. So you might have to assume that you can't move in until the tenant moves out. So really the only downside is paying rent, but you're receiving rent at the same time, and having to delay your move-in date, which might not line up for anyone. But I think overall, if it's the right property, if it's the right house, and you're happy to wait a few months, it could be the best way to go.
So Jaden, the last question I've had recently was someone reached out to us and actually asked, is there a cost to use our service?
No, we don't charge any fees for our services. We're paid by the banks to help find you a home loan. We're the home for home buyers across Australia. So if you need any help with finance, hit us up at huntsgalloway.com.au. We'd love to help out. If you've got any comments, leave them below. Did you buy a place with tenants in it? Did you move in? How did you find it? And until next time, see ya.